here that we were seeing very narrow range consolidation and followed by the up move on Friday. So the important aspect which one should know, especially if you are trading, that one should not preempt a reversal, be it on long side or short side. So nowadays everybody is talking about market seems overbought, and there's a possibility of consolidation or correction. So for basis on that, one should not look for shorting opportunities until the price confirms that yes, the trend has reversed. Then obviously one should align the trades accordingly. But as of now, there is no indication. When it comes to Nifty, that is there that one should not chase gaps when you are trading index at the current levels. Means, to give you an example, that if Nifty opens 70-75 points higher in the initial take, especially when we are at the record highs, it's prudent that one should wait and let the market settle down. You might have ending or buying at the top, at least for the first half, if you just jump into a trade. But if you'll wait for the levels, then definitely you'll get a flat or maybe a better level to enter during the day. So the tone is positive. There is no doubt about it. That is what we discussed in last webinar also. But the overbought position, that is indicating that one should be cautious in your approach, and one should not go outrightly bullish when it comes to the index, especially for the position longs. Another important aspect, that the earnings season has started positively today with TCS. In fact, the entire IT pack, the IT sector, in fact, have started inching towards record high after several years. It's definitely a positive start, but we need to see this momentum building, and obviously that would reflect in the index also, because after banking and financial, IT has considerable weight along with the FMCG. So that is positive, but still I would say that when it comes to the index, if you are an index trader, one should not jump into a trade in a market like this, wherein we are seeing days of consolidation, a very gradual up move in the index. But at the same time, the tone is positive. If you remember, last time we discussed about 24,500 being a key hurdle. We tested the same on Friday. In fact, we managed to close above this level. Now the important part is that we should sustain. If we manage to sustain, then obviously the new milestone, 25,000. In between, we might take a breather around 24,800, but ultimately 25,000. We can see the index, testing in days to come. Downside, earlier we had support at much deeper level around 23,700 zone. So that has shifted to 23,900 now. That is the 20 EMA. As you can see, very thin yellow line on the screen. Prior to that, we have a support at 24,250 also. This bottom of this consolidation range. So when it comes to index, maintain positive tone, but not outrightly bullish. Prefer through option strategies, through bull call spread or through ratio spread, instead of naked long if you are trading index for the overnight position. Means if you're carrying your position for the overnight. So this is about Nifty. Now let's evaluate what banking has to say. So banking, the tone remains subdued for most part of the week. As you can see, this entire period, a dull period. Today also we made an attempt thanks to excess, which made a strong move in today's session, but still we could not post any decisive gain. So banking ended almost on a flat note, marginally negative on the week-on-week basis. Good part is that we are still holding our short-term averages, that is the 20 EMA, around 5200 mark. But the decisiveness, which we used to see earlier, like in Nexus, ICICI, that is missing. So now, obviously, the earning is going to be the key trigger to push the index above this immediate hurdle of 53,000 marks. So once we cross this 53,000 mark decisively and close above this, then eventually we'll see much higher level like 54, 55,000 in the index. So the next trigger is going to be from the earnings is something that especially for this sector the coming week. So as of now, I feel that other sectors are offering better opportunity. So like we've just discussed about IT, then we are seeing FMCG name, pharma names, and selectively from from the banking space also, that we are seeing traction, then auto. So be stock specific, and within the banking space, now we have very limited choice. We've just talked about Axis being a top performer, so where we see a decisiveness in the trend. Other names, HDFC, after the initial decline last week, it continued the same bias for most part of the week. In today's session, we saw some rebound, but it's too early to say whether we are going to see the continuation of the move. So in banking, at least for the time being, one should be very selective, and it is okay even if you ignore until we break this 53,000 hurdle in the banking index. When it comes to the stock specific move. Now, let's talk about where to focus. If we are not focusing on banking, then what all sectors and stock? So the first name that comes to the list is long underperformer, Asian Paints. So as you can see on the chart, it's been almost 2.5 years that we have been seeing this stock trading in a range. It was a broader range, as you can see in the screen itself, that lower band around 2700 mark, then the upper band around 3525. So it's been almost 2.5 years. We have retested the lower band, which also coincides with the long-term averages. And then we are seeing this reversal. So after spending considerable amount of time, this is a weekly graph of Asian Paints, so almost 5-6 months of consolidation, and then we are seeing this move. We expect this stock to gradually inch toward the upper band, means to inch toward 34,000-35,000. Obviously, it's not going to happen in a day or two. But yes, like in the past instances, as and when we see this, stock inching toward this zone, it eventually, try to retest the upper band as well. Obviously, the earnings is the key factor in line with what we are talking about the other sectors and stocks. That is going to be the key factor. But price-wise, volume-wise, indications are in the favor that we expect this recovery to extend. And by the way, it's the, if I'm not wrong, is the last 3 or 4 stocks, when it comes to the Nifty 50 basket, which was under trading under the major averages for quite some time. And finally, we have reclaimed it on the daily graph as well. So on multiple time frames, we have positive signals when it comes to Asian Paint. So that should be on your radar for the next week. Next, from the FMCG basket, last week also we discussed about FMCG being, a sector to look at. We have seen very strong move in some of these names like Godrej CP, Marico, ITC, Britannia, Tata Consumers. As we are seeing this on screen. After this range breakout, we had this pivot formation, means a very tight range move followed by this strong uptrend, and a similar pattern we are seeing here on the weekly charts. So we expect this consolidation, and we are in fact seeing attempts also of breakout. So it's a good zone to look at for fresh investment when it comes to Tata Consumer. And plus the buoyancy in the sector is added advantage. Lastly on the list we have IT major TCS. So in fact we have been discussing this stock for quite some time now, and the good part is that we have multiple supports to look at. So earlier we were seeing this trendline support working very well. Then this range of consolidation range break, which acted as a support area in this decline. So both these factors. So in the last 3 weeks itself, the IT index is up nearly not 3 weeks. Yeah, maybe 3 or 4 weeks, means a month time, nearly 8.5% up. So as we are discussing about Nifty testing 25,000 mark, but we have limitation when it comes to banking. Then we have only two sectors left to look at to. One is FMCG, other is IT. So in FMCG, ITC, HUL, they are performing their part. Now it's turn that the IT index also should make a new high and inch toward the newer direction. So since the result is over, we don't have any major challenge when it comes to any surprises from the earning front. Plus, if we cross this previous high, then we are into the uncharted territory. Means we can see stock making a newer highs, and there'll be no resistance, and as per the range it could be anyway closer to around, let's say, 4450, 4500 to come. So these are the stocks that one should keep a close eye on. So if I summarize what we've discussed during this presentation, one, Nifty looks positive, there's no doubt about it, but the momentum is missing. Why? Because banking is not participating. That's the key reason. But since the tone is positive, one should not look for shorting opportunity. One should look for buying opportunity on dips. Upside 24,800, 25,000. Downside we have 24,250 and 23,900. Banking comparatively weaker when it comes to Nifty. So one should wait for some confirmation, some sign of reversal or buying interest, because a single stock cannot turn the bias for the sector like we saw in today's trade. Among the stocks, we've discussed about three names: Asian Paint, a major consolidation reversal. Then we have Tata Consumers from the FMCG basket, and lastly on the list, TCS from the IT space. So this is all from the presentation part. Now we'll have a quick feedback poll, and then we can start with our Q&A as well. So please share your feedback, and then you can start posting your question using that Q&A button. Please quickly fill this feedback, and then you can start posting your question using that Q&A tab. And I request to stick to the sector-specific, theme-specific queries instead of stock-specific, so that it benefits the larger audience. Please use that Q&A button instead of using that raise an option button. Use that Q&A button. Right. So let's get started with Q&A now. We have questions in queue. So, right. So, first question from Mr. Vishal Jain on chemical sector. So, Mr. Jain, like we have started seeing traction. In fact, it's the continuation of the move uh, which we are seeing in the entire chemical space. Unlike earlier, we used to see very strong moves. So that is not there, but yes, the tone is positive, and we are seeing traction across the board. So just to name few like Deepak Nitrate, Naveen Fluorine, PI Industries. So the quantum could be different, but yeah, the tone looks positive. So you can stay put, and you can look for fresh buying also. But the momentum is missing, so one should plan the trades accordingly. And it is okay if we are not seeing momentum. And but yes, the important part is that the earning is going to be the key factor. If this recovery or this momentum extends. Okay, so there's a feedback or a query like Nifty and Bank Nifty analysis. Can we have analysis on mid cap and Fin Nifty also? So we'll try to add, in the coming webinars, that if we could add at least summary of this so that it benefits the larger audience. But largely, if I talk about, say, Fin Nifty, we have only difference. Earlier, we had the difference of HDFC Limited. I need to check, what is the difference now among the constituents and means from the Nifty and the Nifty. Mid cap, small cap, as a pack, they have been doing exceptionally well. Means though we have had multiple challenges in the recent times for the sector, be it on the regulator side and other things, but the outperformance is continuing. Now the overall participation that has subsided a bit. Means earlier we used to have like out of 2100 stock, which roughly trades on the NSE exchange during a day, we used to see a market breadth of around 1500, 1600 on the advancing side, or 500 on the declining side. But that has changed now. Like, so usually we see around 1000 to 1200 on the advancing side, 700, 800 on the declining side. So now selective stocks which have weight in the index, they are maintaining the positive tone in the broader indices. So that is basically helping both mid cap and small cap index to maintain the positive bias. But since we are entering into the earning season and we have budget also, if you are trading aggressively or adding to your position in anticipation, if somebody is having any loss making position, just for an example, in the mid cap and small cap space, or you are looking for some sign of reversal in stocks which were trading at the 52-week low, and now since all the other stocks they have done well, they might like also participate. Any negative surprise or any profit taking can completely derail this theory. So the good thing is that if we are seeing, let's say, mid cap doing well, stick to the top names from the basket which are trading in sync with the index. Avoid the underperformers. Okay. Next, IT sector. So IT sector, as we have a question from Gautam Chakrabarti. So after almost what, I'll just share the number also, that after how many years we are going to see a new high. So yeah, the high last the Nifty IT index made was in the month of March 2022. So it's been almost 2.5 years now that we are reaching to that mark. So it's definitely a positive sign after a prolonged period of consolidation in IT. Another aspect to look at it is Nasdaq Composite, which at times I refer in my commentary when we talk about IT. So Nasdaq Composite is the tech-heavy index of the US market, and we generally see a correlation wherein the both trade in sync. But this time around, the US tech heavy index has outperformed our market substantially. Uh, there also, like, there were selective stocks, which helped the index to make the noticeable move. But there also we are seeing that the IT index is doing exceptionally well. The broader index S&P 500 is also doing well. Dow Jones is basically consolidating in a range, but the other indices. So we have another important trigger for the IT from the international market as well. So this is the good part for IT. So usually we see that once we reach to the record highs, market take a breather, we consolidate a bit. So that might be the scenario this time also. But we feel that after spending almost 1.5 years under consolidation, the risk reward is much favorable in this sector in comparison to the others. Okay, next we have Chandra Kiran on metal space. So yes, metal is basically not offering a clear indication. So this sector is also hovering in a very tight band for almost nearly 6-8 weeks now, and this week was negative, means nearly 3% kind of a cut. So we may see some profit taking first in metal space before any meaningful move is what the metal index is indicating. But it doesn't mean that all these stocks are going to witness decline. We have already started seeing some correction in Tata Steel and the other names. But at the same time, we were seeing that National Aluminium and some of the other names like JSW, they were holding strong. So it's going to be a mixed move within the sector. As of now, the trend has not reversed yet. Means there's a possibility of profit taking. So just to put you in this into a number, we are at 96.93 in Nifty Metal Index, and if this correction extends, if we break this 9600 mark, then probably 92.30, 92.50 is something that we might test. So roughly around 400, 500 points kind of a correction in the index, and that could be obviously from the heavyweights, because Tata Steel is leading from the front when it comes to this profit taking phase. So be selective in metals for a time being. If you're looking for longs, you can certainly avoid metals. Okay, so next we have question from Dollar. Do we need to book profit in the stocks, IT stocks, as per today's move? No. So IT is something that if the view is very short term, let's say if you are planning for a week, 10 days kind of a time horizon, then maybe yes, because IT might take a breather. Like we are reaching to the record highs after almost 2.5 years. So the sector and stocks may spend some time. But if the view is, let's say, 6 months to a year time horizon, then one can stay put. So as Gural, we have already answered, I guess, this, when we responded on metal pack. Okay. So, okay, we have query from Preeti Bhatt that how one can analyze MFs. So self-study. So if you're associated with us, you can write to the team and on vcare@religare.com, and they'll help you out with this. In fact, you can just go and search our app, Religare Dynamy, and there also you have a mutual fund section wherein you can explore different types of mutual fund available based on different parameters. So you can start with that also as well. Okay, so we have again a question on mutual funds. So I would request, if you have any queries or if you are interested, you can send your queries. If you're planning any investments on vcare@religare.com, and the team would align with you right team members. Okay, stock specific, I've requested, but I'll just answer this in a different way. Sampa Shaha, we have this question on some of the energy stocks. So banking, we have already discussed, that's something that one should avoid. Chemical, we have already discussed. So energy basket is doing well. Largely, in fact, ONGC was among the top performer. Coal India, NTPC, Power Grid, Tata Power, OMC means HPCL, BPCL. Tone is positive. It's just that we are seeing some consolidation at the higher levels, and it's healthy. But my suggestion now, especially for the sectors or stocks wherein we are seeing, exceptional buying or momentum, like defense, railways, some of the other PSUs, you should be very strict with your stop losses now, because there's hardly any consolidation in some of these names. We are seeing newer highs with every passing day, and as the data suggests, the retail participation have increased considerably in all these names. So in case if there'll be any profit taking, it could be sharp, provided that the earnings should support the up move. So if you're holding any of these names, you should be careful. You should keep this list handy, that when the company is going to announce the numbers, maybe before the numbers, if you get the opportunity, you should book partial profit, trail your stop losses. So this is something that how one should approach the energy basket as well. Okay, so renewable energy basket, again, like the same view, because we have seen some of these stocks performing exceptionally well, and this is all on the basis of assumptions and expectation that how this first budget of the new government is going to set the tone for the next 5 years, and what all key priority sectors that they should be focusing on. So obviously, this is there, that when it comes to the priorities, it's going to be the key sector which we shared during the in the interim budget itself, that the infra is being the biggest beneficiary. It's continued to be a biggest beneficiary, means 11.1% kind of growth that we saw in the budget allocation. So this sector means renewable energy, infra development, be it railways, be it digital. So that will remain on market radar. But stocks, they have done exceptionally well in this segment already. So now we should be rational in our approach, that if we are trading, then where we have the stop in place, it can't be like that, that every day we get up, we buy some stock, it goes up, and we book profit, and then we end the day. What if it comes down and we carry, and it slides further in the coming session? So keep your exit plan in place. There's no harm chasing momentum, but you should know how to exit. That is more important. So banking sector, we have already discussed during the presentation. You can go back and listen to this entire conversation on Religare online broking YouTube channel. And yeah, and next, pharma sector. So how it closed, let's see. Yeah, pharma, it was decent close. In fact, it's been the third successive week wherein the pharma index is higher. So we may see some pause, some consolidation in pharma as well, but the tone looks positive. There's no doubt about it. That in fact, today I was seeing that Dr. Reddy's was leading this pack. It's trading around new highs. So yes, this sector looks okay, but again, one needs to be selective in this space. And like some of these name, Granules, Dr. Reddy's, Sun Pharma, Lupin, which we discussed last week during the presentation. All these names are good, but since the earning season is there, obviously we may see some volatility in pharma space as well. All right. So we have largely answered. Okay, so we have a couple of more queries now, and Mr. Jan has questioned what will be our budget specific view regarding corporate taxes. So see, we are not expert, when it comes to all these other matters, be corporate taxation and other civil related regulations. So I can only comment from the sector point of view, research point of view, and that we have already discussed. See, budget is just an event. I personally feel that one should not just go overboard and think only from that perspective. If you are an investor, you have earnings, to focus on. If you are a trader, you have stop losses and targets to focus on. Be it, the other event, obviously the, chances of seeing a momentum in particular sector increases during that period. But what is in our hand is to maintain and manage our risk. So that should be the focus area instead of focusing on the other aspect which is not under our control. Okay, so again, like a couple of stock specific queries. Okay, next we have real estate, and okay, so first we'll talk about the realty sector also. So DLF was on the back foot. That's the reason why we saw that the realty index also ended lower. And in fact, it's a very prolonged, uptrend that we have seen the realty pack, and now we start seeing some sign of distribution. So though it's too early to say that the trend has reversed, but yes, there are indications that we may see some profit taking, continuation of the profit taking in realty space in the coming week as well. So for a time being now, realty should be on your avoid list, especially for buying. Fertilizer pack has done well, especially the stock which are in the cash segment, like RCF, NFL, FECT, GNFC, GSFC. And it's a normal course, especially before the budget, because we give, market always look for clues for, rural development or agri-related plans. But we tend to see these stocks topping out a week before the budget. So again, if you are chasing stocks from the fertilizer basket, be strict with your stop losses, and the prudent approach is to maintain or keep a check on your position size. So let's say if you trade 100 stocks as a buy, then it's time now that you can reduce it to 50. Obviously, it's completely depends upon your risk appetite, but we usually see this trend, and the reversals are equally sharp. So based on that, one should plan their trades. So yes, with this, we have answered all the queries. In fact, we have covered all the sectors as well. So next week, same time, we'll connect again on 19th. And till then, take care. Thank you.